To start it off, I'm going to just give you the quick down and dirty. What is going on with the real estate market? Again, my name is StacyA McBain. I'm with Swope Investment Properties, and I lost my slide. It disappeared. I moved it and I deleted it. Holy heck. Okay. Well, we're going to have to wing it. What did it say? What did it say? It said that buyers and sellers, everyone is price sensitive right now. Investors are somewhat tentative in the marketplace. And so how we're going to see that response is with cap rates actually slightly going up a little bit. We'll see that the price point on fourplexes has no longer been climbing like it once was several years ago. And that buyers may be price sensitive, but sellers, if you price it right and the condition is right, multiple offers and even slight bidding wars are not out of the question. So keeping it reasonable is the name of the game, keeping it attractive, and properties are still selling and still moving. All right. Well, interest rates really affect our cash flow out there. And this is what they look like right now. They're high, and they're not going anywhere. You're looking at mid sixes at least for a single family, 20% down. And if you put more down, you can get your rate to be a little bit lower, at least with Idaho Central. I love doing deals with Dave Rusk. He's just really good at what he does, which is how he ends up having a slide up here. And then multifamily is actually in the mid sixes as well right now. But here's the trend of what the interest rates have been doing through the 10-year treasury yield graph. And you'll see it was really high. They peaked in May, but they've just kind of been up and down since then. And it's higher rates seem to be here for a while. And Danielle, these are Danielle's slides, Danielle Costa of Swope Investment Properties. I'm going to present them tonight. She is down for the count. So what's going on? If you're here, you probably are keeping a close eye or have a single family home and it's either in Ada or Canyon. And the median price of homes is up to $582,000 in Ada County. And our days on market went down a little bit. That median has gone up year over year a little bit, but our days on market has gone down year over year a little bit. But the number of homes sold between this year and last year at this time really went up quite a bit. 20%. And our inventory is actually down year over year right now in Ada County. And these are all indicators which we watch to see what's kind of going on in the marketplace. Canyon County is more affordable. You're looking at a 436,000 or so median, that's a lot less than Ada County. Interestingly, we've seen that the rents in Canyon County have not been, they don't have that same discrepancy anymore like they once did. Days on market in Canyon's up a little bit. Inventory is down. And again, the number of homes sold is up a lot in Canyon County. So we've had a lot of action, a lot of activity. Those of us in the industry are not getting bored, that's for sure. So in terms of rentals, a lot of us are buy and hold investors for cash flow, have long-term rentals. But we've all really experienced a lot of increase in short-term rentals. And Jocelyn Cubis of Swope Investment Properties is a short-term rental market expert and has a short-term rental management company. And so she's going to give us some really key things to tell us some stuff.
Yeah, thanks, Stacy. So for those of you who don't know, I'm Jocelyn, the owner operator of Capital City Comforts. We are a boutique short-term rental company here in the Valley. And I thought that it would be a good topic this week to talk about a bird's eye view, kind of high level of how I analyze a deal for someone, whether it's someone looking to buy a short-term rental or convert their existing property into a short-term rental. And so before you get into the numbers and what's it going to cash flow, you really want to sit back and ask yourself the 6 things about the property. You want to know, where does it sit? What is it going to offer? What can it earn? What will it cost you to operate? Legal, so like zoning, HOA rules, permitting, anything like that. And then when is going to be peak season for you in that home? And so when you figure those things, then you sit down and you look at it from okay, with this property, location and characteristics. So is it by the green belt? Is it near downtown? Is it near the hospitals? What events are going on that's going to drive demand to your property? And then from a characteristic standpoint, are there views, land for family-friendly activities or events, or the potential to add a hot tub? All these things are going to boil down to why someone is going to choose your property over something else that maybe they could stay at while they're here for their visit. And then you kind of break it down from the number standpoint. And so when you do that, you take your average daily rate, you times that by the occupancy, and that gives you your gross revenue. The number that really matters in that is your net operating income. So how you achieve that number is you take account, what is it going to cost me to run this home as an Airbnb? So you have your platform fees, you have your property management fees, cleaning and supplies, utilities, lawn care, snow removal, and then taxes, insurance, HOA, and then your maintenance and ongoing repairs. And so once you get your gross revenue, take the operating cost, then you get your net operating income, then you can see, okay, after, you know, service debt and all of that, what I can cash flow on this property. So that's kind of like a high level of the way that I analyze a deal when I'm looking at it for someone. And if you have any questions about that, just let me know. Okay.
I have a question, Jocelyn.
Yes.
You know, I hear on the podcast that it's getting tougher and tougher for short-term rentals. Are we seeing that in this valley?
I'm not experiencing that on any of my properties right now. It's actually one of the highest revenue years across some of the platforms that I use, but it's very different from a management standpoint versus like maybe someone just running it themselves, because there's a lot of things that we can implement to maybe give it a little bit more of a competitive edge. Like automated pricing, like making, I mean, it's my full-time job to make sure that your listing is performing. So whether that's swapping pictures, updating small things in the description to keep your listing above others in the algorithm. So I'm not seeing that. So yeah, good question.
I will say, I listed my house before I rented it out on Airbnb. Shocked me. I thought I'd get nothing, and I was rented out almost every single night in
Yeah.
Caldwell.
Yeah.
That's crazy. But I didn't do the little checklist, make sure it ran me out.
Yeah.
No, I know.
There is a new statute bylaw. I don't know what the technical term is, but if it was something that was really generating you a lot of revenue that you want to kind of push for, there was something recently passed where your HOA cannot prohibit you from making your home a short-term rental any longer. Now, whether you want to like get in a tip with your HOA, if you're going to own that house forever, and you got to pick and choose your battles, how much more were you making and is it worth that fight? But yeah, HOAs are no longer allowed to restrict short-term rentals. There's a lot happening here in Boise and the Treasure Valley that's kind of pushing towards making it easier for people to have short-term rentals. Like through the city of Boise, how you can get those pre-permitted ADUs and just use one of their building plans, slap it in your backyard, and pretty much bypass the whole permitting process to get it up faster. So there's a lot going on that's encouraging that, which I mean makes sense. You have traveling professionals, Micron doing its thing, and so people need housing, and so I think they're doing a lot to encourage that. Probably 70% of the people staying in my Airbnbs right now are like Micron employees. So
I need to be like 7 months ago.
yeah. Well, all the analysis that we do for our homeowners are completely free. So you take it and you do what you please with the information. If you just have one short-term rental, we encourage self-managing. If you're sick of it and you just want it to be mailbox money, of course, we'd love to work with you. But we will run the numbers for anyone for free to show what the performance of their property could look like. Anyone else?
Great one, Jocelyn. Thank you.
Okay. Now we got our lovely Travis here.
Yeah. Okay.
I know when you're as good as the intro with Stacy.
Okay, so I'm just gonna do a quick little land kind of summary for Ada County. I'm also gonna do Valley County. But back to Jocelyn's thing, we used to rent to traveling nurses.
Yeah.
Yeah, that was a good one. So in case anybody wants to know. But so this is just 6 months sales data off the Intermountain MLS. So a couple things to look at. I had a hard time finding what font color would work with this picture, but price per acre, and what spurred this idea is I did a CMA for a gal that I've known. She's been a family friend for about 35, 40 years, and she's got a 2-acre parcel off Chinden. And so I did a deep dive into what land is worth in Ada County, what it's going for, and like kind of tried to value that, whether it's on a major road with the stoplight location. So I kind of went down this little road, but 6 month sales data, we in Ada County, there are 63 residential lots sold and 20 commercial and industrial parcels sold. So this is not off market deals. This is stuff that you can like filter on the MLS. Price per acre for residential was $327,000. So that's like a building lot. So some of these big, like Valor out in Cuna, leaves a couple of lots open for like Shadow Mountain Homes, for example. They go in there and they buy stuff, but and I did Parade of Homes for Shadow Mountain, and they were paying about $315 a lot. So it's, kind of on par. Days on market for residential lots, 74. Commercial price per acre was a little bit down. Typically, you're going to have a bigger piece of property. And days on market were 118. The commercial CMA I ran it was kind of blew me away. I kind of used what Talk does, which is a kind of a price per square foot, and they listed kind of a finished product at about $25 a square foot. I came at $20 a square foot because there's like a neighbor that's leasing the property, and it was $1.85 million. The lady bought it 30 years ago for $100,000. So we got a lot of growth coming to the valley. A lot of it's going to be South Meridian, southeast Nampa, Cuna kind of country out in there. So there's a lot of just kind of wrapping your head around what's going to happen in the next 25 years. By 2055, they think there's going to be 1.1 million people living in this area. So, and I think there's about like 865 right now, which is quite a bit once considering I moved here about 25 years ago and it wasn't much going on. So as you can see, the difference in list price, median is kind of the one to focus on. List price 515, sold price 490, total volume of close to $80 million in the last 6 months. But notice 63 residential lots. So when we switch to Valley County, 6 month sales data, 94 residential lots. And the difference in the two is there's a lot of pre-planned, platted communities around here so there's not a lot of individual lots available for sale. In Valley County, there are. Typically in Valley County, you got to have a well and a septic. It's about $1,000 a foot for a well. So in Valley County, that's fine because a lot of the water table is about 40 feet deep. Once you get over into Adams County and New Meadows, you're touching 100, 200 feet deep. So it's a little different ballgame. Price per acre there, typically about a 1 acre to 2 acre lot, location specific. So Valley County includes Cascade, Donley, and McCall, and there's three very different markets there. There really is. $92,000 an acre, 91 days on market, not a lot. So this goes back to mid-January. Not a lot of stuff moves in February, even March up there. Commercial price per acre 15,000, days on market 62. So they're really kind of lagging in the commercial aspect of this stuff, and that's like more county controlled impact zone. That's not in the city commercial. So it's a great second home market. We lived up there for 15 years primarily, and both our kids were born up there, but it's hard to go out to eat. So you kind of got like, it's just, I love it. I was up there. I took this picture the other day. This is the River District in Cascade. That's a friend of mine's building that home. We have a couple of new builds in there. You're right on the river. Lots in there about $200,000, and they're about a half acre. But $43 million in total 42 in total transaction price in your median. And there's some other stuff on the MLS that designates like recreation land. So that would be like a very small chunk of land, like you would just, I don't know, kind of park some rafts on or something. So, great. Any questions or any comments, I guess? Okay, thank you.
Thank you, Travis. Nice job. Cool to have someone who's doing so much with land now, because that really,
Yeah, I've got 3 land listings. First 3 land listings I've had, and just kind of set me down a road. So
yeah.
And the lot we built the home in McCall, and we bought that lot in 2010 at the courthouse. So it's a completely different market.
quick question for you. Yeah, you mentioned Boise County, like, north of Horseshoe Bend.
Yeah. I didn't look at that, but there is, so when you, what Stacy showed was, a couple slides ago, that's like Boise Regional Realtors puts that out with market kind of snapshots. They don't do that for land, and they didn't look at Boise County. I was gonna look at Boise County, but like Garden Valley and stuff, the land is, it's about comparable to what we call it, $92,000 an acre, but I can totally, put these up for you, but.
Later on, I think, that's the publish, I do.
Okay, yeah,
That's some questions for you.
yeah, you got it.
So from land to rentals, specifically the duplex, fourplex inventory and what we have going on in that side of things. Inventory has been steady. It dropped a little bit, but just a bit. Pending deals has increased just a bit, but sales really steeply dropped over the last month from 19 to 9 in duplexes and fourplexes among Ada and Canyon. And the absorption levels have just been all over the place lately, up, down, and sideways. But that gap in absorption tightened up a little bit. That range went just from 3.2 to 5.3. So it's not quite as expansive, mainly because the Canyon County fourplexes had a range, and it went from 9 months of inventory to 5.1 months of inventory. So our indicators aren't too crazy. Things are fairly steady, not moving drastically in any one direction. But what we have seen is back in 2022, we were following the 2020, just the flood into Idaho. And Tony Drost, who's been running the Ada County fourplex data for decades, has started comparing where we are now with where we were a few years ago when it was really quite the spike. And we've seen that prices have clearly and gradually declined a bit since that spike. The gross rent multiplier was at peak at 220, and it stabilized in 2025, and now it's retreated downward a little bit again in 2026. Of course, the higher that number, the better it is for someone trying to sell a property for as much as they can. The lower the number, the better it is for a buyer in terms of what they're getting in the rent compared to purchase price ratio. So it's come back down a little bit toward buyers. And the cap rates, opposite, the higher it is, the better for a buyer. And those have inched up. They were down to the 4s in 2022. And now they're nearly 5%. So we definitely have that investor tentativity I mentioned has shown itself in the market data and what's going on in Ada County fourplexes, which really set the bar and give us a gauge for what's going on rental wise. So here's the red line is the 6-month trailing average. Here's what cap rates look like. Here's what the average price looks like, down a bit. And then here's what that gross rent multiplier looks like. Down a bit. So especially since that 2022 timeframe. And days on market is low though. This is what the active inventory looks like for fourplexes in Ada and Canyon. See a couple price drops in there. And when we get to 5+, when we were out of houses in 2022, there were very few units and properties for sale, and the 5 units or better. And now we can actually see that there is some inventory in there. And in terms of the rental market overall, Janice, you had some stuff you wanted to share for us rental owners.
I just ran across this business. They just opened in May. It's called Second Chance Appliance, but it's not related to the thrift store. It's brand new appliances that are dented or scratched, or like the refrigerator hose had been broken. And it's on Franklin. They have a 1-year warranty. I brought some cards. They have a huge one, huge. And then next door is Quality Technicians. They're sharing the space and they're taking care of appliances. So I just thought, we've got rentals. And then really, really quick, when I was at the Landlord Club last night, there's nobody to come to.
Yeah, there's a lot of crossover in membership, and I love IROMA. Now it's called IROC, and I don't make as many meetings as I should probably because of this, but they're great.
They're busy. But anyway, this fellow came and did a really excellent presentation on surface experts. And they just do repairs. They're not reconstruction or anything, but your glass top stove tops. If they're really, really bad, they can grind that down. Your countertops, if you have one hole or, a crack or something, rather than replace the whole countertop, they can take care of that. Your cabinet doors, your bathtubs, your showers. And so their goal is to, of course, save space in the landfill. And then a quick turnaround because he realized we were renters. So I have cards for the appliance store, and I just have a brochure for this. So anyway, I just wanted to share that because I thought it was really interesting.
Thank you.
Okay.
Yeah, I used to get some of the,
And if
like,
you want to know about the landlord club, I'm glad to tell you about that too. Yes, we'd like that. Sure. All right.
great, thank you.
Uh-huh.
Yeah, for some of those places have closed. Like we used to get, there was a Sears outlet, we got appliances at that closed, and it's nice that I think there was a market for that too. So first rate property management, gosh, for a while there, they have, I don't know how many fridges they have, but they have to stockpile appliances because landlords go through some fridges. But what's going on from their perspective, since they have such a strong inventory and are kind enough to let us use their conference room? Summer is starting to wind down from the rental market perspective. They do a lot of their turnovers in spring and they're starting to wind that down. July, this month, has had the highest renewal rate in years. So people are staying, even with gentle rent increases. Now, they've also been very clear. Tenants know what places are renting for. They know what's going on out there. And so if you push that too far, they're going to move, but they'll tolerate a gentle increase. August, I think Boise School District starts August 14th. So isn't that crazy? And so that's a month from now. So that's a real big time peg in terms of listing. I'm looking to avoid it. First rate's going to expect turnovers to turn down a lot after that. Prices are going to drop a little bit after that. It's not going to be the hot season. So rents might have some downward pressure. And Rick sent me this article and I checked it with Melissa, but this was a KTVB thing that Rick had pointed out where they said rents were up 2.1% last month and 10% last year. They were reporting it off of Apartment List was the source, and talking about, did they talk about evictions in that article? Evictions increasing?
No, they were saying it's 6% or 10% up since the beginning of the year. Which seemed pretty high, so.
And that's higher than Melissa's seeing here at first rate, higher than the NARPM data, which is not quite released. She said the NARPM data showed us a great vacancy rate of 2.21%, so historically low vacancy. But so this, who knows, depends on which apartments you're looking at. But overall, we definitely have an affordability thing going on. I was just talking to Owen, who was saying there's a few more foreclosures out there, a few more evictions we might see just as affordability gets pinched. But this data felt a little hyperbolic to those of us who are boots on the ground. But yeah, rents are steep. Boise's changed a bit.